the real team with ESG. Yes, there's an actual team here. Anyway, the reason why we're doing this episode is Stephen basically is a CPA, formerly here a New Yorker, and now we're in Florida. And we're talking about it's snowing over here in New York, and I'm kind of wanting to move to Florida at this point. I'm ready for spring training. You can't tell I'm a Yankee fan. Anyway, the real reason we're doing this video is, Steve, tell them what's the subject for today.
The subject is the issues that self-employeds have when applying for a mortgage.
All right.
And
go ahead.
One of the first questions asked on a mortgage application is, who do you work for? Are you self-employed? And that becomes like a real hassle. If you work for somebody, and you could send them your W-2 form. If you are self-employed, then you got to send them a P&L. And then if you're not familiar with
explain what a P&L is.
Oh, I'm sorry. It's a profit and loss statement.
Okay.
And if people keep their books up to date and they need a profit and loss statement, then it shouldn't take much to get a profit and loss statement. But a good one is more than what you're putting in your QuickBooks file, or more than what you're committing to an Excel file. Because most people in small businesses who work for themselves will commingle their personal expenses with their business expenses. And when my clients who have businesses say, oh, we're getting a mortgage, we need a profit and loss, I know to ask them certain questions. How much BS do you have in your profit and loss statement? You have how many grandchildren? 10, and you provide cell phones for all of them, and you're writing it through the business. That's deflating your income. And if I know that, I won't even take it the deduction on their tax return, because it's a little stretching it too far. So the personal expenses could be trips and vacations, could be use of your car, where if you're using your car in business, unless you have a car exclusively for business, you're supposed to allocate personal use with business use. The other thing is a non-cash item like depreciation. So when I prepare a P&L for somebody a profit and loss statement, for somebody who wants to get a mortgage, I make sure I ask those questions. And so we're going to have on top, income from the company, sales, and then we're going to have your legitimate business deductions, rent, utilities, insurance, et cetera, and even like health insurance is something that should be pulled out, because the new owner, that's if you're going to sell your business. If you're just getting a mortgage, you still want to show that these are personal expenses that are being run through the business. And you could have a business insurance policy for health insurance. So I pulled them out. What does that mean, pull them out? I'll show income minus operating expenses, net income before owner's benefit. And what's in the owner's benefit? Personal use of cell phone, personal use of auto, trips and vacations, depreciation. Well, depreciation is not owner's benefit, but it's a non-cash item, so it could be a separate category. So the mortgage person is seeing what the business is actually doing, okay? And it's important. I mean, this comes up all the time. In fact, I was quoted in the Wall Street Journal a couple of years ago, and that was the topic. And it was nice to see my name in the Wall Street Journal, not being carted off by the federal authorities, but actually
I'm glad you said
it. Making a contribution that people could benefit.
It was a positive article, folks. It's a positive article.
And I got a bunch of phone calls after that from people who were looking for help. And so it was nice to get quoted there. So
I think one thing I wanted to point out to people is pretty much, don't think that basically you're the only one going through this. There's a lot of people going through this, and they seek help. They look for advisors, experts in this field, such as Stephen, to help them go through whatever the process is. You have to talk to your professionals, listen to their advice, heed their advice, and take action to whatever they tell you to do it. So whether it's your realtor, your loan officer, your CPA, you should listen to all the professionals that you hired. That's what they're there for.
Yeah, and kids don't try it at home. You really shouldn't do your own personal financials. You shouldn't really do your own business financials. If you're trying to get money from somebody, you should really speak to somebody who has done it and understands what's involved. I know what the bankers look for. I find out what the mortgage companies look for. Most of them have similar ratios that they're looking for, and you just want to know beforehand so you don't waste your time. You don't want to spin any wheels. Getting pre-qualified is a really good thing, but being up to date with your business profit and loss is very, very important.
I think that's really everything you just mentioned is really important, especially in today's climate when it comes to real estate. If you're looking to buy, properties are not lasting on the market for too long. So you really need, if you have an idea, I want to buy a house, you need to start sitting down with your CPA. If you're a sole proprietor, self-employed, you really need to sit down with your CPA, work out a game plan with your CPA, then reach out to your lender, and then the realtor, in that order.
And another line item, like below the line, you've got your sales and you got your business expenses. Now, you may have people on payroll, so you're going to have office payroll or warehouse payroll, but I will pull out office's compensation and also show it below the line. Because some owners of companies, draw a minimum salary, and some, do a heavy hit. Let's just use $100,000. Or 300,000, whatever the number is, depending on the size of the company. But I will pull that out and I'll show it below the line. Again, this has nothing to do with your tax return. It's just how financial statement presentation, that's going to go to a bank or a mortgage company who are going to make a decision on whether or not they're going to lend you money over 30 years or 15 years. So those are the key considerations. And they, sole proprietors, self-employed, they get scrutinized much more heavily than somebody who's an employee.
So I'm going to suggest one more time, think about buying a house. Before you meet with the realtor, before you meet with the loan officer, meet with your CPA. If you do not have a CPA, reach out to your local realtor, a Yankee fan, and he'll suggest basically you reach out to Stephen Rosen. Stephen, how can they reach you if they're interested in talking or just have some questions?
JetBlue to Fort Lauderdale, or you could get me on the phone. It might be cheaper. 516-491-3887 is my cell phone. My office is 561-609-2388. And for you Jerseyites, it's 908-403-4419. And since
he's giving you his phone number. Utilize it. Give him a call. You have questions. That's what he's here for, to answer those questions. Go through your scenarios. Utilize 19 years you've been in the business? 19 or so?
No. I think I've been on this call for 19 years. I started my practice in 1997, and before that I worked over 20 years in small and medium-sized New York City CPA firms.
All right. My point is utilize his expertise. That's what he's here for. Okay. Anyway,
and if any of you are familiar with email, my email address is Stephen@StephenRosenCPA.com, and Stephen is STEPHEN.
I'm glad you said that, because a lot of people still spell it wrong. Anyway, with that being said, Stephen, thank you again for being on the show one more time. This has been The Real Tea with ESG. And I am really, really, really ready for spring training. I can't look at any more snow. I really want to retire my shovel at this point. Steve, is there any room in your house right now? Because I'm coming over.
We have a nice guest room.
All right, I'm on my way.
On the other side of the house, we have a nice guest room. And I want to thank you for having me.
Anytime, man, anytime. All right, Stephen, thank you so much. I know you're a busy guy, especially this is beginning of tax season. Anyway, I just want to sign off. Remember to share this with friends, family, anybody that you think might find some value out of this. And that's about it. Enjoy your tea, folks.